1999. If you had invested 10,000 rupees in this one Indian stock, today it could have been worth close to 6 crore rupees. Not crypto, not some startup, but a motorcycle company. And here's the hardest part. The stock was never a straight ride up. There were crashes, bad phases, and long periods where nothing happened. That's where most investors sold. But you know what? Finding great companies is hard, yes, but holding them long enough is even harder. So in this video, we will walk you through 6 Indian stocks that turned ordinary investors into Crorepatis. But more importantly, we will be decoding the pattern behind all of them, what these businesses did differently and when the real opportunity appeared, so that the next time you spot a great business early, you actually have the conviction to hold it. And as we go through each story, ask yourself one simple question. Would you have actually held this stock or not? Okay, so let's start with stock number 1, that's Eicher Motors. Most people think Eicher is a purely Indian company, but it's not. Back in the 1950s, an Indian company called Good Earth partnered with a German tractor manufacturer, Eicher. That partnership eventually became Eicher Motors. But here's the plot twist. By the 1980s, Eicher's German parent company was struggling. And Eicher India, a smaller company in a developing market, turned around and acquired the German company. In the 1980s, for an Indian company at that time, that was almost unimaginable. Now let's talk about what this meant for investors. In 1999, Eicher Motors traded at around 1.2 rupees on a split adjusted basis. Today, the stock trades above 7,100 to 7,300. That means a 10,000 investment back then would be worth roughly 5.9 crore today as of 12th May 2026. But that journey was anything but smooth. Through the 1990s, Royal Enfield, which Eicher owned, was nearly a dead brand. Sales were weak, bikes were unreliable, and the business had no clear direction. Most investors would have walked away. Then Siddharth Lal took over and made one of the boldest calls in Indian business history. He shut down 12 out of Eicher's 15 businesses and went all in on Royal Enfield. One product, one brand, one bet. And what did he do with it? He didn't try to make it cheaper or more modern. He doubled down on the heritage, the retro design, the riding culture, the lifestyle. Royal Enfield stopped being just a motorcycle. It became a feeling, a symbol of freedom. And that feeling turned into a cult. For investors, Eicher is a masterclass in one thing: focus. When a company kills every distraction and bets everything on its best asset, the returns can be extraordinary. Okay, now let's move on to stock number 2, MRF. But first, a quick question. How many of you grew up thinking MRF made cricket bats? Almost everyone does. But that bat logo is just sponsorship. MRF's actual business is tires, and it's one of the most powerful wealth creation stories in Indian market history. MRF stands for Madras Rubber Factory. It was founded in 1946 as a toy balloon manufacturer. Balloons to India's largest tire company. Now look at the numbers. In 1993, MRF traded around 11 rupee per share. Today, it trades above 1,25,000 to 1,30,000. And here's the crazy part. The company has practically not issued stock splits or bonus shares after 2000, which means the share price itself kept compounding higher over decades. A 10,000 investment in 1993 would be worth roughly 11.3 crore today. But the real story is how MRF built its dominance. It didn't just sell car tires. The company expanded into truck tires, two-wheeler tires, exports, motorsports, and even fighter aircraft tires. Deep R&D, relentless quality, and iconic branding made MRF the dominant player in Indian tires. MRF never chased trends, it just made better tires than everyone else for 80 years straight. Okay, now let's move on to stock number 3, which is Asian Paints. It started in 1942. During World War II, imported paints had completely dried up in India. 4 friends in Mumbai spotted that gap and started a small paint business. That company became Asian Paints. The strategy from day one was simple: go mass market. Small affordable packs, rural distribution, decorative paints for everyday Indian homes. Then came a move that was decades ahead of its time. In 1970, when most Indian companies weren't even thinking about data, Asian Paints installed an IBM computer to manage inventory and deliveries. They were using technology to run their business before anyone else even considered it. The result was faster delivery, better stock management, and a distribution edge competitors simply couldn't match for years. Now the wealth creation. In 1990, Asian Paints traded around 0.35 on a split and bonus adjusted basis. Today, the stock trades around 2,500 to 2,600 rupees. A 10,000 rupee investment back then would be worth roughly 7.1 crore rupees today, excluding dividends. And the business didn't just stop at paints. Asian Paints expanded into kitchens, bathrooms, decor, complete home solutions. It didn't just sell paint, it sold the idea of a beautiful home. By the time competitors figured out what Asian Paints was doing, it was already too late to catch up. Distribution, data, emotional branding, build all three early and you become very hard to beat. Okay, now let's move on to next stop, which is HDFC Bank. In 1995, HDFC traded around 5 rupees on a split and bonus adjusted basis. A 1 lakh rupee investment back then would be worth roughly 1.5 crore rupees today, excluding dividends. And this wealth was not created through one lucky phase. It came from nearly 30 years of consistent execution, retail banking growth, and disciplined compounding. Over the years, stock splits in 2011 and 2019 increased original shareholding nearly 10 times. Think about India in the 1990s. The economy was just opening up, private banks were brand new, and people were used to government banks. Into this environment, HDFC Bank launched and the IPO was oversubscribed 55 times. The market saw something special from day one. But what made HDFC Bank pull ahead of every competitor? While other banks were buried in paperwork and slow systems, HDFC was going digital aggressively and early. India's first international debit card, online real-time net banking, SMS banking, mobile banking, AI chatbots, instant digital loans. Every time technology moved, HDFC was already there, not catching up but leading. And while doing all of this, they were quietly building the largest private bank distribution network in India. Today, it has over 9,600 branches and 21,000 plus ATMs across thousands of cities. Nearly half of those branches are in semi-urban and rural India, exactly where long-term banking demand is growing fast. The philosophy never changed: controlled risk, customer trust, execution at scale every single year. Boring to watch but extraordinary to invest in. Okay. Now let's look at stock number 5, which is Titan. Rakesh Jhunjhunwala, the man many call India's Warren Buffett, made several great bets in his lifetime. But Titan was his most iconic bet. He bought it early, held it for decades, and that patience turned into thousands of crores. In 1999, Titan traded around 4 rupees on a split and bonus adjusted basis. Today, it trades above 4,000 to 4,500 rupees. A 10,000 rupee investment back then would be worth roughly 1 crore rupees today, excluding bonuses and dividends. Titan launched in 1984 when Tata Group decided to modernize India's watch industry. Back then, a watch was just a functional object. Titan made it a lifestyle statement. Stylish designs, aspirational branding, premium feel, everything at accessible prices. It took off fast. But the real transformation came when Titan stopped thinking of itself as just a watch company. Tanishq built India's first organized, branded jewellery business at a time when jewellery buying was entirely unorganized and trust was a huge consumer problem. Tanishq solved that. Then came Fast Track, which became the go-to youth brand. Then I+ in eyewear. One by one, Titan built category-defining brands and each new one expanded the total opportunity. Today, Titan has 3,600 plus stores across 440 plus towns, close to 5 crore loyalty members, and a market cap of around 3.5 lakh crore. The playbook was simple: find an under-penetrated market, build a brand people trust, keep expanding. That's how a watch company became a 3.5 lakh crore empire. Okay, now let's look at the last stock on this list: Bajaj Finance. In 1987, Bajaj Finance was a tiny two-wheeler financing company. If you'd walked past it, you wouldn't have looked twice. But the company figured out one thing early that quietly changed everything. Indian consumers will pay for speed and convenience. Give someone a loan fast, without drama, without stacks of paperwork, and they will always choose you. That single insight became the entire business. Bajaj Finance started with two-wheeler loans, then consumer durables, the EMI for your TV or fridge, then personal loans, gold loans, digital lending. It kept moving into every retail finance category where it could offer speed and simplicity, and it dominated each one. Now the numbers. In 1995, Bajaj Finance traded around 0.25 rupees on a split adjusted basis. Today, it trades above 900 to 950 rupees. A 10,000 rupee investment back then would be worth roughly 3.6 crore rupees today. But this wasn't just a rising stock. Bajaj Finance completely transformed the lending experience. Loan approvals went from days to minutes to seconds. The EMI card gave customers a pre-approved credit line before they even asked. The Bajaj FinServe app became one of India's top finance apps. Today, 10 crore plus customers, 4,200 plus locations, and an AUM of over 4 lakh crore rupees. Strong risk management kept the book clean. Technology kept the experience sharp, and relentless execution kept the compounding going. The most powerful businesses aren't always the most exciting ones. Sometimes it's the company quietly solving an everyday problem better than anyone else. Alright, now let's zoom out, because this is the most important part of the video. Eicher, MRF, Asian Paints, HDFC Bank, Titan, Bajaj Finance. 6 different industries, 6 different products. But look closely and you'll find the same 4 traits running through every single one of them. First, they reinvented themselves at the right moment. Second, they built customer trust as their moat. Third, they kept expanding their universe. And fourth, none of this happened quickly. These weren't overnight stories. These were businesses that kept showing year after year, decade after decade, until compounding did what it always does. It made the numbers look absurd. Just look at what long-term compounding actually did. The next great stock probably looks boring right now, underwhelming even, and that's the point. So here's the question I want to leave you with. When you look at your portfolio today, do you see any businesses that check these boxes? Companies quietly reinventing, building real customer trust, expanding into new categories. Drop the names in the comments. It would be really interesting to read them. If you like this video, do give it a like and subscribe to this channel for more investor breakdowns. See you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.